Good afternoon. We have made the decision to raise the key rate by 100 basis points to 6.5% per annum. Today's decision is based on the updated macroeconomic forecast that was significantly revised. The growth of the Russian economy sped up in the second quarter, and inflationary pressure turned out to be higher and more persistent than forecast. Some sectors are already demonstrating signs of overheating. Inflation expectations also continued to go up. Given the observed trends, we have revised our inflation forecast upwards by 1 point. This year, it will equal 5.7 to 6.2%. The important step in our policy, which we have made today, is needed to bring inflation back to the target. We expect inflation to slow down to 4.0 to 4.5% next year and stay close to 4% further on. Nonetheless, our policy will not contain these steady rates of economic growth. I would now dwell on the factors behind our today's decision. I will start out with inflation. As of 19th of July, inflation was 6.5% in annualized terms. This is considerably above the target and is close to 5-year peaks. High growth rates are driven by both temporary and steady factors. According to our estimates, steady factors dominate at this moment. They are associated with the fact that expanding demand in many industries exceeds their potential to ramp up output and imports. This accelerates price growth as well. As to the product groups where prices rose the most in the second quarter, these are construction materials, furniture, and cars. When people expect prices to rise faster, they decide to make large purchases earlier. To do this, they use both savings and borrowings. Growth in consumer lending again sped up to a quite high rate, which was driven by accommodative monetary policy, among other things. On the other hand, accommodative policy lowered the demand for bank deposits, especially given accelerated inflation. There are also other markets where price growth was rather caused by one-off factors and limited supply. This is tourism. For instance, only a part of foreign destinations have been reopened, whereas Russian resorts infrastructure is still insufficient to accept the entire tourist flow. As a result, prices for tourism services soared, which also sped up inflation in June. Furthermore, May-June recorded a surge in prices for such vegetables as cabbage, potato, carrot, and beetroot, which was because 2020 harvest stocks started to end before the new harvest supply. However, the contribution of such one-off factors to overall inflation is smaller than that of steady factors. The increase in prices for these everyday products is very noticeable and significantly impacts inflation expectations. June and the first half of July showed the first signs of weakening inflationary pressure. This is still not enough to speak of a steady decline in the inflation rate. In July, households' inflation expectations continued to rise. In these conditions, even one-off factors might have a longer-lasting impact due to their secondary effects. To prevent this, it is essential to create conditions that would encourage the propensity to save. For this, we need higher interest rates. We should not tolerate high inflation expectations in order to prevent their anchoring at this high level and avoid a more significant increase in the key rate that would be needed further on in this case. The second topic is the economy. According to our estimates, economic growth sped up considerably in the second quarter. High-frequency indicators show that Russia's economy has bounced back to its pre-crisis levels. Output in 2/3 of the major industrial sector already exceeds pre-crisis levels, and this upward trend continues. Oil production has not yet recovered. Moreover, output has not recovered in international air transportation and hotel and restaurant business. However, this was due to remaining anti-pandemic restrictions rather than insufficient demand. Moreover, the pandemic drastically affected the structure of demand and supply. In my previous statement, I mentioned the changes caused by the transfer of a significant portion of employees to work from home, as well as the elevated level of inventories now formed by companies. Replenishing their inventories, companies substantially increased their demand for commodities worldwide. Russia is a major producer of key commodities. High demand for Russian exports spurs economic growth this year. As companies complete their inventories, the effect of this factor will be tapering off gradually. The growth of oil exports quantities will also be supported by the easing of the OPEC Plus oil production cuts in response to the recovery of demand. Taking this into consideration, we have raised the oil price path in our forecast by $5 per barrel in the next 3 years. According to our preliminary estimates, the expansion of oil output under the new OPEC Plus agreements will add about 0.1 percentage points to GDP growth this year and 0.2 to 0.3 percentage points next year. Another important growth driver is domestic demand, including both consumer and investment demand. Considering these trends, we have revised our economic growth forecast for this year upwards from 3 to 4 to 4 to 4.5%. After the recovery, the economy will expand at a pace close to its potential. We forecast that GDP will equal 2-3% in the next 2 years. The possibility to achieve high economic growth rates will depend both on the expansion of production and logistics capacities and on labor resources, their expertise and performance. Third, monetary conditions have been progressively adjusting to the earlier increases in the key rate, but are still accommodative. The yield curve of federal government bonds, which is used by banks as a benchmark for the interest rates they set for their clients, has significantly increased for maturities of up to 3 years, while staying almost unchanged in the long end. The rise in short-term yields reflects both our recent decisions and market expectations regarding the future key rate path. Shifts in long-term yields are minor. Among other things, this is an evidence of the market participants' confidence that monetary policy will finally bring inflation back to the target. I would like to reiterate that these are long-term interest rates rather than our key rate as such, as is often stated, that determine the affordability of credit for companies' investment purposes and of mortgage loans. As compared to yields on federal government bonds, interest rates on loans and deposits have responded more slowly and rose less significantly. Our today's decision is aimed at accelerating this process. An increase in interest rates will help restore households' propensity to save. Growth in retail and corporate lending is close to its highest rates recorded in recent years. Many borrowers seek to take out loans as soon as possible at lower interest rates. We have raised our lending growth forecast for this year. Mortgage lending will continue to expand fast, while slightly decelerating after the amendments to the subsidized mortgage lending program become effective. Speaking of unsecured consumer lending, we can already observe the first signs of overheating. This lending segment has been growing faster than we forecast in April. On July 1st, we returned risk weights for consumer loans to the pre-pandemic level. However, given recent months' data, we will soon make a decision on additional macroprudential measures to cool down this segment of the retail market. I will now speak on possible risks to the forecast. Pro-inflationary risks continue to prevail. We consider that the main risk is a potential anchoring of inflation expectations at a high level. Fueled by high inflation expectations, temporary growth might become sustained. There is a slight increase in risks associated with a possible faster normalization of monetary policies in advanced economies. As a result, market volatility in emerging market economies might intensify, which can affect exchange rate and inflation expectations. There are also certain risks caused by structural changes in the labor market due to the pandemic. The demand for some professions is declining, whereas the demand for others is rising. This is confirmed by data on a record high increase in vacant jobs. Adjusting to the new needs of the economy requires time for specialist retraining. Consequently, this provokes local staff shortages. The situation is aggravated even more due to the restrictions on the inflow of labor migrants, which affects construction and seasonal agricultural works most seriously. The situation in the labor market might increase companies' costs. Pro-inflationary risks associated with the environment in global commodity markets persist. Nonetheless, June-July recorded the first signs of a decline in world prices. Therefore, I would say that this risk is less acute than at the moment of our previous key rate meeting. Furthermore, investment from the National Wealth Fund and geopolitical risks are still in the focus of our attention. Disinflationary factors are much weaker. A rich harvest might result in a more significant seasonal decrease in food prices. The pandemic situation is still uncertain. The spread of new coronavirus strains worldwide might force countries to introduce new restrictions and disrupt production and supply chains, which in turn might slow down global economic recovery. For Russia, this would involve a decrease in external demand and intensify disinflationary risks on the one hand. On the other hand, if borders are closed, domestic demand will remain elevated longer, which might become a pro-inflationary factor. In conclusion, I would like to comment on monetary policy prospects. Beginning from March, we have raised the key rate by a total of 2.25 percentage points. We will assess how our earlier decisions have been influencing monetary conditions, aggregate demand and inflation. We will also consider how quickly supply-side constraints have been weakening and, accordingly, what level of the key rate is needed to bring inflation back to the target. According to our revised forecast, the average key rate next year will equal 6 to 7% per annum. Further on, as inflation expectations go down and inflation decelerates, the key rate will return to its long-term neutral range. We still estimate this neutral range to be at 5 to 6%, provided that inflation is close to the Bank of Russia's target of 4%. Thank you all for your attention, and now I am ready to answer your questions. Please, Elena Fabricna, Reuters. The current decision to raise the key rate could be the last one to toughen the policy, if positive, against which conditions? It is premature to talk about it this way because there are too many uncertainties within the trends, and we are not in a position to be finite. This is not being ruled out but not predetermined. The set of circumstances within which this could be the last step to toughen the policy is when we will see that the inflation components in their stable nature go down, as well as the stable decline in the inflationary expectations. Please, next question comes from Anastasia Savelyev, Interfax. Good afternoon. Good afternoon. I wanted to find out whether you believe that the inflation could be changed by the deflation in Russia according to your forecast, and what kind of further considerations you had? Did you consider 150 and dividend 75, which was unusual in terms of the PPs, and you are not able to reconsider your schedule in terms of the further decreases? When are you going to revisit this particular topic? Thanks very much for your questions. 4 questions altogether, so I will go by order of appearance. So the first one, as far as inflation is concerned, it is true that the current rate, I mean, if we talk about the seasonally normalized, I think that the price growth is currently becoming to slow down. We see that in June it is slower than in May, but the annual inflation in the course of the next few months most probably will stay at the previously reached level in many ways because of the base effect. And we expect that the price pressure will, I mean, in the annualized results, we will start observing it as of the autumn. As far as the deflation is concerned, or rather the seasonal price decline during the last months of summer and the beginning of autumn, it depends upon how the fruit and vegetable harvest plays out, because we do not exclude that such a seasonal price decline may take place. And in as far as the rate is concerned and various options that we considered, we at our board meeting didn't consider the possibility of rising it by 25 percentage points, considering various inflationary expectations and our inflation forecast. We looked into 50, 75, and 100. As far as revising the target format, the target level, we shall do it as part of the review of our monetary policy that we have previously announced. We are about to start it, and it will last for almost a year. We are preparing our plan for this particular work, and we will disclose it in the second half of September. It will cover different aspects, the analytics, the various debates and statistics, so that we could take a look at whether it is worth revising and updating various monetary policy aspects. And this is the kind of work that we're going to start doing shortly. Next question comes from Anastasia Saprikina from University. The Bank of Russia Friday somewhat softened its signal in terms of what it is planning to do. Does it see the need to rise the rate at its next board meeting in September? Based on your expectation, which key rate level will enable Russia to enjoy seeing the key rate going back, inflation going back to the target? Yes, indeed, we have softened up our signal a little bit, and we shall consider over the next meetings the need to change the rate, and we will assess it based upon the data collected and also upon the further revision of what we see in the economy development and the inflation. What is the level of rate that will be needed? We will make our decision about the monetary policy and define the rate level in order to bring the inflation back to the 4% level. We currently see it in such a way so that next year the average annual rate will be in the range in between 6 to 7%. And so as far as the next year is concerned, that will give us the inflation within the range of 4 to 4.5%. Now, the specific path towards it will evolve as the economic situation evolves. Andrei Birikov, next question from Bloomberg. Good afternoon. Andrei, we can't hear you. Could you please unmute yourself? Can you hear me now? Yes, we can. So next year's inflation forecast was Let me remind us of the wording that we've written into the target. We have 4.4%, but we are verbally saying close to 4%. Certainly, our inflation cannot always stay at the level of 4%. 4.5 is the way we see it, as being close to 4% within our target range. But of course, the risks have shifted towards the pro-inflationary factors, and this particular range reflects it. Besides, next year we will arrive at 4.5%, somewhat from the top, from the higher inflation levels. And we will indeed be looking at the way the inflationary situation evolves and how these steady inflation factors behave, because these are the ones that in many ways will define the situation and our monetary policy decisions, respectively. Rita Shpilewska, next question from TAS. Good afternoon, Elvira Nabiullina. Good afternoon. I would like to ask you to be more specific about revising your objectives. Why did you say it right now? Because your deputy, Mr. Zabotkin, is saying that the revision process depends upon multiple decisions. And second question, if I may, you have raised the current forecast, and so is it specifically being clearly observed that there is an overheating taking place, and would it bring about a certain revision of the underlying policies? And as far as revising, rather, we don't call it a revision, just a review of our monetary policy, some time has already elapsed after our inflation targeting exercise. We were able to achieve our level close to 4%, and so there is quite a reason for us to do a bit of a retrospective analysis. Like we previously stated it, we are going to consider the phrasing, the wording of what the target should be in terms of what it is comprised of. Basically, it means that even if we review this particular target, it would be more on the downward side of it rather than upwards, because we don't believe it is really worth raising our inflation target, because anything above 4% in terms of inflation longer term doesn't provide us with the kind of advantages that the stable low inflation may give us, because households and businesses may have questions in terms of planning their performance. Additionally, the higher is the numerical value of inflation, the more volatile it is. Now, in terms of its downward movements, we may take a look at the other emerging market economies, because many of them actually began from the level of about 4% inflation target. But having reached it, they were able to reduce it. Many had it at 2 to 3%. I would say that there are very few central banks where the level of the target could be above ours, primarily below our level. So we would need to take everything into account in terms of the impact upon our economy, considering our economic structure. And so we will be having a debate with the academicians, with the business representatives and the general public in the course of the year. And with regards to the mortgage lending, after the conditions for the subsidized mortgage lending haven't changed, we do see certain alterations. Not so much time has gone by, because these changes came into effect of July 1st. And so our information covering the first 2 weeks demonstrates that as part of the subsidized mortgage lending, it used to be 6.5, now it's 7%. The new loans quantities went down almost twofold. But it doesn't mean that the whole portfolio contracted twofold, because some of the loans that previously were in the category of subsidized can now be switched into the routine market kind of lending, or certain more exemptions, family kind of lending. But the mortgage lending rates in the first half of the year were quite high. And even considering a slowdown in the second half of the year, the end of the year results will remain to be significant, and we will very much scrutinize it, and we continue it, because you know that as of August 1st, we raised the markups for the mortgage lending with the original contributions, original down payments at 24%, because this particular part of the risk-related loans continue to grow. And against that, it is important for us to make sure that the mortgage lending retains quality. And if necessary, we'll undertake additional measures, because the mortgage lending market is in a special range of our intention. Dmitry Putin comments that in the new central bank outlook, there is an expectation showing the reduction of the household spending. Do you believe that the cooling of the lending to households will be swift enough? Should one expect additional restrictions in the consumer lending market within the next few months? Well, indeed, we do note, like I previously said, a bit of an overheating in the retail lending segment, and we took steps in order for this market to cool down. As I said, as of July 1st, macroprudential markups will go back to their pre-pandemic level. But in terms of the retail unsecured lending dynamics, we see that this is not enough. And we are already having the discussions, and very soon we are going to make a decision about additional measures to be put in place, because we do see the number of high debt burden lending growing, which we do see as a very risky trajectory, and so respective measures will need to be taken so that along our forecast time frame to reduce the lending pace in order to conform to the income dynamic more strongly. Next question comes from Ekaterina Litova from Vedomosti. Good afternoon. My first question is how will that particular policy will affect the depositors' behavior and basically the retail investor? And have the central bank considered anything in relation to the Minister of Finance policy in using the National Welfare Fund and the structure changes? And so what would you comment on that? Well, you know, I can't be very specific in saying that against a certain key rate level, the consumer behaviors will seriously alter, because it in many ways will depend upon the level of inflation expectations, because households compare the rate level with the kind of inflation that they foresee. And we see that the inflation expectations come as the result of many factors, but amongst other things, the way prices for the staples and everyday consumption products grow, like what we say the specific vegetables that I've referred to, either under the impact of the global price growth or the seasonal factors, that through the inflationary lens could form a certain set of stable impacts. And so changes in the consumer behaviors and a greater propensity to save might be taking place under such an aggregate impact coming from several trends. Now, investor behavior is dependent not only upon the deposit rate, although in the 2020s and the beginning of 2021, this effect was quite tangible. It also is dependent upon the availability of various instruments and the level of attraction in the stock market. But nevertheless, if the deposit rate is going to be better or more attractive, a certain redirection of the flow from the deposit segment into the banking instrument sector may happen. As far as de-dollarization is concerned, the Ministry of Finance made a decision about the structure it will keep in the National Welfare Fund. Due to that, we're not changing our approaches to the banking regulation, but in our banking regulation, we have already envisaged the measures which are aimed at making the ruble-denominated and ruble-denominated loans more attractive, loans and deposits, and make the currency instruments less attractive. This is our policy of reducing the currency component in the bank's balances. But we don't see that it is quite worthwhile following the same kind of a policy in terms of the different kinds of currencies. Our overall policy is to reduce the risks in the Russian banking system in relationship to the currency risks, because when exchange rates differ, these risks should remain minimal. So we do approach it in terms of the currency differentiation, so we didn't discuss that. Next question comes from Pavel Kazanovsky from RBK. Good afternoon. What are different factors apart from the oil price growth factors might long-term influence? Yes, we did take into account not only the price indicators, but also the export volume growth. And the export volume growth, first of all, can be explained by the fact that the global economy is recovering faster than many have expected, and that is why the demand for the commodities also takes a long, and Russia is the supplier of the commodities. It's only the oil and refined products, and so the volume indicators are growing. Second point, we also took into account the OPEC Plus agreement, which calls for the volumes to grow as well. But as I've mentioned, with regards to oil, we also changed upwards our forecast for oil prices. Anna Shatskaya, Znamya publication from the city of Belgorod. Good afternoon. I would like to find out whether the price hike that we have gone through wasn't the result of the official measures being taken to reduce the prices for sugar, beetroot, and other staple products. Well, the first thing that I would like to mention, these are different processes. I mean, prices for the staple vegetables as well as the prices for the flour, oil, and sugar. As far as the sugar and flour oil prices are concerned, these have grown as the result of the global market environment because the global prices went up. As far as the staple vegetables are concerned, this is quite seasonal. You see, this year, the crops stored from the last year have been exhausted much faster, because you may recall that last year's weather was not a good one, and so the shelf life of this particular product was shorter, and that is why the crop was exhausted, while the new crop hasn't come yet, and that is why in May and June prices for these have sped up. We expect, and we already see, that the prices for the vegetables, which are part of the staple set, are already going down, and that will continue. This is purely a seasonal kind of story. That is not like it is in the case of sugar and the flour oil. But with regard to the general price regulation and the administrative impact, I mean, the short-lived effect definitely comes from it. We've always underscored and we currently emphasize it is not only important to watch out for the short-term effect, but also for the long-term one, so that we shouldn't make the producers stay away from investing into further production expansion, because when prices are growing, what should be an adequate response? To expand production in order to meet the demand. But if the regulatory measures, even short-term, will make the producers stop investing into production expansion, saying that administrative measures might fall upon them from the blue, By the way, in as far as the Belgorod area is concerned, because annual inflation depends upon many factors, and in as far as the Belgorod region is concerned, in June it was 6.58%. A little bit above Russia in general, but structurally the overall picture compared to the general Russian one is different, because we see that in your region food products grew faster price-wise, but non-food products and services were much slower than that, but that is the regional specifics, I'm sure. The next question comes from Alexander Chuno from The Bell. Since the start of the inflation in Russia and in the West, is it a short-term phenomena or longer term? And my second question, the senior executives of the major banks expressed a certain concern with the way the central bank is regulating the banking ecosystem. Doesn't mean that you might reconsider the concept. As to the inflation nature, long-term or short-term, temporary or sustainable, in different countries it is different. Indeed, a very fast recoil of an economy after the COVID restrictions have been lifted, and more longer time it took for the economy to adjust led to many countries witnessing the inflationary pressure growing. The central banks in many countries believed this to be a temporary thing. As soon as the supply readjusts itself, prices will start falling. But if you take a look at the way the central banks in these countries are stating every time, they are quite cognizant of the way the inflationary expectations behave. And that will happen if the inflation expectations anchor themselves. Unfortunately, our inflation expectations demonstrated inability to anchor. Maybe they were more anchored compared to what it was before the inflation targeting, but simply because the inflation growth had a very prolonged kind of a nature, and prices grew with respect to many products which are in the staple kind of a basket set. We do see that the inflation expectations grew significantly, and most importantly, for about 6 months or even more, they've been remaining at that high level. It all leads to the one-off factors through the inflation expectation mechanisms, demonstrating secondary impacts, transforming into a more sustainable kind of factors. This we can see even with respect to the kind of goods where usually we do not notice any sort of a one-off factors like the global market environment, seasonality. We do see that the price growth is considerably above 4%, meaning to say that the sustainable inflation components nudge up above 4% level. So in our case, there is a combination of both stable and temporary factors. But again, we deem this a situation where the stable factors do prevail, since that requires a response from the monetary policy side of things. Now, in as far as the ecosystem and the ecosystem regulation are concerned, we came out with a report, two reports, ecosystem regulation and the banking sector regulation. And this particular one applies to the banks which develop ecosystems. We believe that such regulation is something that must be introduced, because this kind of an operation and investing into the mobilization assets, because currently it is very difficult to discern between the assets which are part of the ecosystems, which are not part of the ecosystems. This kind of a notionality is still evolving, but such investments may incur higher risks for the lenders and depositors, and so in order to protect the interests of the lenders and depositors, the regulation must be changed. Yes, the banks may develop such activities, but the risks coming from such investments must be covered by the shareholders, i.e. capital. Let me remind you that in many countries, even the leading economies, the retail banks which do raise the households' deposits are forbidden to invest into non-financial assets. In some countries, if they do invest into non-financial assets, then the adequacy capital requirements are really quite huge. We propose a much softer approach with some intermediate periods, so I'm quite sure that such regulation must be introduced, but of course the what they should be made up of, we'll discuss it. We disclose it in order to be able to discuss it with the marketplace, but also with the experts. The response by the banking industry is something that we expected. It hardly could have been a different one, but we do believe that we act in the interests of the depositors and the bank lenders so that the banking system could be stable without the risks surging, depending upon whether the banks are developing ecosystems or they don't. And again, as opposed to many other countries, we believe it is very useful for the banks to develop the ecosystems and to enjoy various synergies from financial and non-financial services, but the competition must be equal for everybody, for such banks, for not such banks. But again, the nucleus in such a system is where the lenders and depositors' interests are very much securely safeguarded. Next question comes from Ivan Shligin for Magru. To what extent the Russian inflation depends strongly upon the American one? Should one expect inflation at the 4% level in Russia if in the United States it will be above 4%? Well, without doubt, the Russian inflation may be affected, particularly in a short-term aspects, the growth of prices upon the products which we import, something that is above the inflation and the above level of rates in other countries that might also impact the monetary terms, the financial terms in different channels. It may do so, but I would like to underscore that the inflation level in Russia, longer term, depends upon the monetary policy pursued. But once again, I will emphasize that our measures and the decisions that we make as part of our monetary policy activities do generate a certain effect, but with a bit of a lag in time. And so after the inflation spike, we believe our decisions will definitely lead to the inflation going down, but that will take place next year. The next question comes from Vladimir Peshkov, Premier Media Vologda. Yes, so good afternoon, Elvira Nabiullina. Recently, I think during the International Financial Congress, you touched upon the topic of the limitation of the floating lending rate, and you specifically mentioned that such limitation should be introduced based upon the regional specifics. Could you please give us an example of what kind of regional specifics should be taken into account when defining the size of such rates? And don't you think that these floating rates might undermine the overall lending rate growth? Well, first thing that I would like to say that definitely wouldn't lead to the rates growing up, because currently, in terms of the floating rates that the households do receive, is very little, about 0.7%. It's more of that on the corporate side of things, and that is why the floating rates are not so common. But we believe that it is necessary to introduce such a regulation because the banks started getting interested in such instruments, and also in as far as the mortgage lending is concerned, also all for the floating rates. And so broadening the case of the floating rates, which is not yet so common, may bring risks to the ones who take it, particularly in as far as the long-term loans are concerned, where such floating can be very much unpredictable. And so an individual or a household which took a loan at one rate will be then quite surprised by seeing these rates grow. I believe that shouldn't be allowed. And so we have also prepared an advisory report in order to have it discussed with the financial institutions and with a broader expert community about what kind of regulatory parameters should be brought into effect. And so the results of these debates demonstrated that regulation should be introduced, and this should be a differentiated kind of regulation. I mean, the floating rates without any limitations, we believe, should be, linked to some big kind of loans where qualified borrowers are in a position to professionally assess the risks, are more well-to-do, and they are not so risky. And these kind of limitations could also be different depending upon whether it's a mortgage loan or it's simply consumer loans, different size of loans, different maturity of them. And so what we are talking about is that they could also be differentiated in between different regions, which requires additional discussion, whether it really makes sense. I mean, what kind of differentiation would make sense? And the reason we think that such differentiation can be allowed, look at the mortgage lending. The current subsidized mortgage lending is limited to the loans which don't exceed 3 million rubles. But if we take a look at the Moscow's case, it is less than 10% of that. I think about 8% of mortgage loans are less than 3 million. The rest of them are much higher. So for the rest of the regions, whatever is above 3 million, that would account for about 50 millions of loans issued. So it could be different in regional centers and local municipalities. So we want to discuss this with the marketplace, and we have agreed that sometime before August 20th, because currently the draft act is being looked into, and we will prepare our own calculations and we will listen to what the marketplace are saying in order to come up with a very well-balanced decision. Next question comes from Anastasia Saveleva, Interfax. Good afternoon once again. In the first half of this year, the federal budget was performed with quite a profit, a surplus, and many analysts are saying that towards the end of the year, we also may see a surplus. What do you believe this kind of situation with the federal budget performance, how significant it may be in terms of effective inflation? Deterring inflation. In your revised forecast, do you rely upon the profit or the deficit of the budget, and how do you take into account in your GDP forecast? Well, in our forecast, we act on the assumption that the budget is going to be balanced, taking into account the overall surplus and deficit. But whenever we talk about its impact upon inflation, not the overall surplus and deficit indicators are important, but the oil and gas deficit. And even if the budget overall ends up being on the surplus side, we act on an assumption that the non-oil and gas deficit will remain as it is expected to be according to the budget law, because the profit that may evolve, it may appear because the non-oil gas and oil income grow as well as oil and gas income grow. If oil and gas income grow higher than expected, that would go into the National Welfare Fund, and there's not going to be any negative impact, but the additional non-oil and gas income will be applied to additional spending, and that won't affect the oil and gas deficit. Non-oil and gas deficit. And so these are the kind of changes in terms of the budget performance that we do not foresee impacting the inflation. Next question comes from Elena Fabricina from Reuters. How sizable the carry trade flows this year may be against the backdrop of the rate growing, and how that might impact the exchange rate and through it upon the inflation? Well, first of all, you'll recall that the exchange rate influence upon inflation has also gone down, and so the carry trade basically effect also has shrunk. The exchange rate is a floating one. It is being impacted by many factors, not only the carry trade, because the carry trade is just one of the indicators of the capital flows out there when the whole money is being invested at the expense of the short-term borrowings, and where the bat is being put upon the interest rate differences. But nevertheless, the high rate of the interest rates and the rising of the interest rates that we see leads to the ruble as a currency becoming more attractive for savings, both by the Russian households as well as the international investors, and the acquisition of the foreign assets by the Russians may fall, as well as the foreign portfolio investors may become more active, and so the carry trade is, as I said, is just one of the bits and pieces in this. We do monitor these indicators. Yes, it has become a little bit active because the rising of the key rate makes the carriage rate a bit more sought after, but the volumes are not bigger than they used to be during the previous period, and we don't believe that it produces any significant impact upon the ruble exchange rate. Next question comes from Evgeny Pismina from Bloomberg. Good afternoon. Last week, European Commission announced the so-called framework conditions from the future carbon regulation. Previously, the central bank came out with its assessment, but in a very much general kind of terms. Currently, it has become much clearer, what we should expect. Could you please tell us whether the central bank has assessed what the Russian companies may incur in terms of their expenditures during the initial stage of it, and the overall effect? How do you see it? Is it going to be negative or not negative? And how will that affect the Russian economy? That was my first question. And my second question, you already said that the National Welfare Fund investments is what you are monitoring. It has become known that the currently government is discussing increasing the investments out of the National Welfare Fund, not just 1 trillion that, as I understand, you have cleared within the next 3 years, that won't negatively impact the macroeconomics, but also raising the amount for the service sector by 900 billion. But please tell me, if one buys an equipment from the West worth 900 billion, will that impact inflation, or will it be just overseas spending and this is something that one can afford? If the budget, if the fiscal rule allows us to do, the 7% of the GDP. As far as the border adjustment carbon tax is concerned, indeed, if this is one of the factors that will grow in its influence over the Russian economy, not only short-term, but also long-term, and that would also impact the demand for our traditional export products. We are doing stress testing, and we will do that on a regular basis. We did the first stress test without yet fully comprehending all the things that the carbon tax is made up of, but definitely our first exercise demonstrates that whatever the CE has come up with is what we have been able to reflect quite well. And so the result of our stress test demonstrated the impact to be quite moderate, but we've always been saying that this moderate impact within a short-term period mustn't really make us feel complacent, neither us nor our companies, because there are very ambitious targets that have been set in order to reduce the emissions by the European Union by about 55%. If this carbon tax is not enough, we understand that there's a very strong probability that it will be further toughened, and this impact will also grow, and we should start getting ready. On top of it, the Russian economy is going to be impacted not only by such taxation, but also by other measures from this whole package of initiative, as well as the prohibition on the internal combustion engines, which are running on the high, strong carbon footprint fuels, as well as the greater share of the renewables. So this has to be taken into account. The second thing, of course, this is a challenge to the Russian economy, but also it is quite an incentive to diversify the economy and make our economy compliant with all of the ESG standards and make a better contribution into this global agenda to reduce the climate change. As far as the National Welfare Fund is concerned, indeed, the spending from the fund may generate a certain impact upon the overall macroeconomic situation and inflation, and that is why it must be restrained, it must be limited, and the scheduled spending must not be correlating to the oil price specifically. And as far as purchasing equipment abroad, we believe that it would influence the inflation, because such purchases will also, they may affect the exchange rate, they may affect the capital flows, and if we, let's say, buy the foreign-made equipment, the same rubles, the amount of rubles may find its way into the currency market. So we can't say that there is no impact. It simply has to be more finely assessed. We believe that in terms of the macroeconomic efficiency, it would be best to invest money from the National Wealth Fund into the projects which improve and increase the Russian economic potential and incentivize its growth. Next question comes from Evgeny Shumilov from the Altaisk Pravda Gazette. Barnaul, tell us, how do you believe is it possible to reduce the commodity products with the help of reducing prices upon them through the export quotas and duties? And will these measures help to deter inflation currently? We generally believe that administrative measures, administrative regulatory measures, should be restricted in terms of their impact. I mean, of course, the easy one is to freeze prices, but the kind of measures which are more market-based, like introducing the floating duties, should also be applied with caution, because the kind of mechanisms which allow one to curb the temporary global market fluctuations, negatively impact the Russian market is a good thing to do. But most importantly, the businesses must be able to understand what it is all about, and the level of such measures should support the economy. Whenever a business is exporting, whenever another business is selling domestically, there should be an incentive to expand, and all of this should be symmetrical or fiscally neutral, because when a business sees its windfall profits being taken away during the period of the high global market price environment, a certain compensation should be due when the prices are lower. And so in the course of such a mechanism being in place, that I would say would undermine the interest to invest into the production expansion. It's like the mechanism of a dampening duty for the oil and refined product exports. Similar kind of thing we know is applied in the production of barley and wheat. So we always need to think about having incentives for the businesses to expand their operations. Otherwise, if such duties are applied without any principles, that may negatively undermine and negatively impact the investment climate in these industries. And once again, I would like to emphasize that the global price environment dynamics that recently we as the central bank and the Russian government have been quite worried about, and with respect to the steel and timber and some other products, we see that there is a bit of a stabilization currently in place. For example, like the timber industry is showing a better one, although the overall price levels remains higher than it was last year. But the pro-inflationary risks in the meantime have ceased to strengthen, and even somewhat went down since the last board meeting. Well, as I understand, that has been the last question. I'd like to thank everybody for your attention and have a good day. Thank you.